All right, welcome back to Follow the Money Radio, friends. Great to have you here. And once again, we are joined by my very good friend and longtime financial advisor, Mike Mitchell. Mike, it's great to have you on the line today. Thanks for joining me.
Good to be here, Jerry. Good to see you.
You bet. So today we're going to be continuing in our education. We like to do education on these various financial topics. And today we're going to be talking about business owners. This is a really cool strategy that many business owners may not know exists. And we want to talk about it today. And it has to do with something called key man life insurance, key man insurance. Can you break apart what this is, what this strategy is for the business owner and how it can benefit them?
Yeah, I can. Businesses and businesses are organized in either their sole proprietors or their partnerships or their corporations. And in any of those business formations, you have either a owner or an executive or a couple of owners, or even possibly an employee that's vital to the company, vital to the company's revenue, or this employee may have a particular skill set that would be detrimental to have lost if something happened to them, that you really want to protect the company in the event that employee or that very key person gets taken out of the picture. So what a company can do is obtain a life insurance contract to cover the potential financial loss or the risk of losing revenues should that employee or that key person be taken out of the picture for whatever reason. So putting that kind of an insurance contract in place that the company would own and be the beneficiary of is vital for the protection of the future viability of the company.
It's a really powerful thing, Mike. The thing that I noticed whenever I was, an advisor many years ago was the fact that I remember one case in particular, I got an introduction to this particular strategy. And it was a business owner who had just lost one of his top sales guys. And this guy had been with the company, it was an automotive company. And he had been with the company, for 15 years. He left a huge, massive hole for this business owner. And we were helping the business owner kind of pick up the pieces and try to find somebody to replace. I mean, it was a devastating hole that was left. And this would have been a perfect solution for him. So it's not just, say, a CEO of the company or the CFO of the company, but it can really be any key employee that the business has that is very instrumental to the revenue for that company or, driving revenues for that company. So it doesn't have to be just a executive.
Yes, that's absolutely correct. It could be an employee who is a great salesperson or who has a great reputation in a particular industry or market, or maybe just has skill sets or client contacts, client bases that if they were gone, if they were taken out of the picture, it would devastate or very drastically impact the company's bottom line.
Mm-hmm. Okay, so this is basically a company owned life insurance policy where the company will then go in and they'll say, okay, well, we have a key employee here that we want to cover, a key man or key woman in this case. And we could say, we want to cover this person. We want to buy life insurance on this person. Now, do they have to buy permanent life insurance or can they buy a term insurance policy?
No, it sometimes term insurance makes good sense in these situations. So, a key person that you wanted to protect the company's bottom line with a 20 or a 30-year term insurance policy might be the solution for that. The thing you have to keep in mind, of course, is term insurance by its very nature terminates at some point. So at the end of that period, then you're going to have two issues. You're going to have to look at, if you're going to renew that policy, the cost is going to go up, and there may be some insurability issues with that employee's life. So it might not be a situation where you can continue another term period on that particular employee because of insurability issues. So those are the two things you have to keep in mind when it comes to term insurance.
That's a good point. Yeah, you could, quote unquote, save a little as far as outflow on the actual premiums initially. But
Right.
you're right, insurability can become an issue in the future. So there's a lot of questions for a business owner
Correct.
to look at, and a lot of issues to look at. Okay, so then the company buys the insurance policy. They are the beneficiary then. So if something
Yes.
happens to the employee, like the story I had told, where the top sales guy died in a freak accident and it was terrible, and in this kid's situation, the business owner was left without that death benefit that would have come to him tax free. Now, let's make sure we understand that usually with these key man policies, the company is paying the premium. They're going to receive the death benefit, but those premiums are typically not tax deductible. That's right. They're going to get a tax free. They'll get a tax free death benefit in the event they do get that, but the outflow is not going to be tax deductible. The payments.
That is correct. The death benefit will not be tax deductible, but typically the premium payment is not typically classified as a business expense by the IRS. So they're not typically tax deductible. Mm-hmm. But there are so many variations and so many iterations of the use of a key man policy. One area that we get into when it comes to working with a lot of our business clients is when it comes to doing some kind of buy-sell agreement where maybe a deceased partner's family needs to have the interest of that business bought out by the surviving partner, and having a key man policy in place to make sure those proceeds are available would be a really important use of a key man concept. So buy-sell agreements, stock redemption agreements, things of those nature, where we help our business clients formulate those and use them properly to take care of those particular situations.
Okay, so the business owner is pretty empowered with this kind of strategy. He knows that if something happens to the employee, that he'll be able to recover, perhaps, or he buy himself a little bit of time there to be able to recover and find a replacement.
Right.
What are some of the, maybe we've already hinted at some of them, but what are some of the downsides or pitfalls for the business owner before he makes a decision to do this? What should he know that could go wrong for him? What are the possible downsides?
Well, I don't think there's a lot of downside to the business, because, the whole purpose of a key man policy is to protect the future financial viability of the business. So there's not really, in my mind, a whole lot of downside to the business itself. Possibly cost factors might be an issue. Things of that nature might be something to consider. But to the key man himself or herself, you have to remember that when you purchase a life insurance policy, insurance companies are going to only participate up to the insurable value or the human life value, economic value of that person. So if a business obtains a life insurance policy on an employee, that employee must authorize or agree to have that policy purchased on their life, because it's going to actually tap into his own private personal ability to obtain maybe as much insurance as he might want if that capacity has already been used up to some extent. So there is a possible downside to the employee himself that he needs to be aware of, when he goes into that agreement.
Such a great point, because many people don't view insurance as a privilege. They often view it as a right. They think, well, I can just go buy as much as I want. I could go buy $50 million on myself of life insurance and change my family tree. Right. Well, that's not going to happen, because the life insurance company has to, like you said, they have to see the human economic life value.
That's right.
And so I guess if a executive of a company is already maxed out with life insurance on himself, that this could complicate the strategy. So you have to have a few things kind of line up, I guess.
You really do need to coordinate both the business need with the employee's personal need. Those are vital issues to keep a focus on, because it can create a problem, to the employee's family is personally. So, making sure those are coordinated is real vital.
Just valuable information and financial education from Mike Mitchell, a longtime financial advisor. He's a part of our Christian Advisor referral service. And there's business owners out there watching this right now who may have the light bulb coming on saying, this actually makes sense. I didn't know this strategy was available. Mike, you do these. You've been doing these now for decades. This is something you can help people with, whether it's a key man policy for their business or whether it's, you even mentioned the buy-sell agreement. Those are very powerful. Mm-hmm. Talk about what folks who are listening can do if they want to reach out to you, what that looks like, what that process looks like.
If this is something that as you said, the light bulbs kind of come on and you see there might be a real important way to protect your business in the event of losing or potentially finding a key employee moving away from the business, you might want to tie that employee to you a little tighter. And then we can get into some discussions about golden handcuff strategies and deferred compensation strategies. Those are things that we work with our business clients with all the time. So if we can help in that regard, then I would just invite people to give us a call. We have a toll-free number, and that number is 833-370-0777. And we would love to be able to talk with them about those issues.
So folks can call you at that 800 number. They can also email you. That email address again, Mike?
Is mike@followthemoney.com.
Perfect. So they can reach out to you by email or by phone. We have those both right now on the screen. So if they want to reach out to you by email or by phone. Fantastic, Mike. I sure do appreciate the education you provide our members. You've been doing this now for many, many years, and it's always a pleasure to talk to you. And I know that so many folks have benefited from your advice, both just through these videos, but also in person with all the folks you've been helping. So thanks again for your help, and God bless you, my friend.
You're welcome. Thank you.
Take care. We'll see you next time.